folks, Dan Frio here with your real estate update for what is today, December 6, 2023. Today we're going to talk about two things. We're going to talk, one is why I predicted 5.5% interest rates, and if everything works out the way it should over historical data, going to be, and I'm going to show you how and why. And the next thing is we're having a live event this evening. Kyle Seagraves of Win the House You Love, as well as myself, and we're going to go over the number one question that people ask, and I even chat GPT'd this. The number one question first-time home buyers have is, so those are the two things we're going to go over today. So without further ado, let's get to it. The first thing you're seeing right here is mortgage rates continue to drop. And now, no, it's not a plunge when it's only going down 0.03%, but it's a long way off from 8.03 where we just were. So if you look over there, the 52-week high, which we hit about 2 months ago, it was October 19th, I want to say. It was 8.03. Today we're at 7.08. So we're right about 1% lower than where we were. Why? There's a lot of economic data coming in that's showing basically cracks in the foundation, cracks in the economy, cracks in employment, and the things that the Federal Reserve watches. So let's get over to the economic calendar we have today so I can show you guys what's going on. Yesterday, we had some of the manufacturing numbers that came out, and if you take a deep dive in some of these, some of them dropped a little bit more than expected, but these are just the headline numbers right through here. They came in kind of right in line. The number here, though, that came in yesterday was the JOLT index. Now, this is how many job openings there are. How many people had job openings and transfers? Well, that number was 9.3 million previously. Look at the plunge, 8.7. There's only 8.7 million job openings out there. This was about 11 million during the pandemic. So it's quite a bit down, and this is just telling you manufacturers and companies aren't hiring right now. Okay, that's also over here where a lot of people are not getting jobs. Do you have the ADP payroll numbers come in today? Last reading was 106,000 new jobs were created. They expected that to spike up to 130. I actually didn't know how this number was going to come in because we had a lot of people that were on strike that are now back. And that I thought maybe that would skew the numbers a little bit, plus the holiday season, hirings of that. So this number is really surprising, to be honest with you. There's another piece of this equation I want to get over to, and it's right through here. Usually I show you guys this page right here where I follow the bond markets to figure out what's going on with mortgage rates. We're going to come back to that part in a second, but over through here I want to show you guys unit labor cost. You're seeing right through here. The number previously was 3.2. That means wage costs were costing manufacturers 3.2% higher than it was previously. That is plummeted to negative 1.2. So think about that. That's 4.5% of a drop in labor costs. So these are showing us that the foundation in the economy is cracking, exactly what the Federal Reserve wanted. So will they pivot? Will they reduce rates shortly? Well, let me give you my thoughts behind this and why I predicted 5.5 and why I'm still saying we're going to be at 5.5 to 6%. You know, maybe that's where the economics should put us. And let me explain to you why. What normally happens is how you factor in mortgage rates, or you look at the 10-year Treasury bond, its yield, and then you look at mortgage rates. Okay, so what we do on this page is I do follow the 10-year Treasury right through here to give me a bead on what's going on with that. But we follow on a daily basis what's going on with mortgages right through here. But let me explain what my thoughts are here. The 10-year Treasury is right here. Look at the yield, 4.14. Okay, if you look at historic numbers, the difference in the 10-year yield and mortgage rates are what? Well, that's the number that I want to show you guys. If you go over here and you say, what's the gap between the 10-year Treasury and mortgage rates? On average, throughout history, it's about 1.5, and it can teeter up to 2% during kind of bad time. And we had recently where there was a 3 spread between that. So I'm like, okay, rates are going to come down, folks, just because of historic numbers. So once things kind of blend out and average out and the dust settles in the bond market, where we should be is the difference in the 10-year Treasury versus mortgage rates should be 1.5, maxed out at 2%. So let's get over to see where those numbers are right now. So if you go through here and you look at the 10-year Treasury, yield 4.14, that means rates on the high end should be 6.14. But historically, if you add 1.5% to that, we should be at 5.5. That's where I come up with the 5.5. I'm just using historic data, bond yields, and current yields in today's market. So what we're going to talk about this evening on our live event is how much can you afford? That the number one question people get, and I chat GPT this and said, what's the number one question that people have when they're buying their first house? So we're going to go over this evening this little tool right here that we created, and it is basically how much can you afford? So Kyle Seagraves has created this website. Well, it's not a website. It's actually going to be a link that you could buy down in our description down below. And if you use the keyword or the promo code Dan, you're going to get a discount. But what it goes over for you is you can plug in all these numbers. You can say, okay, I want an FHA loan, so I'm putting down 3.5%. The rate today is 6.5%. And you put in all your details. You put in how much money you make, what bills you have. Then if you have a co-borrower, you put in all their information. You go down through here. And what it's going to tell you is right through here. It's going to say, conservatively, here's how much you can afford. But you can go down through here and say, well, conservatively, I can afford that. Moderately, I can afford that. If you want to really get risky and push the edge of getting pre-qualified, I wouldn't suggest that. But you can also afford up to a $560,000 loan. So we're going to go over how this works, how you can look at it, how you can even purchase it. But if you want to check out these numbers, join us this evening on our live event. You can ask the numbers live. We might even pick you to go over this scenario so we can customize it exactly for you. So let's get back to our news for the day. So what we want to do is talk about right here. So the data that we had today, I just went over, and it's showing, like I said, the employment numbers aren't looking good. The job openings numbers are starting to crash. Unit labor costs are coming down. That means prices of things should start coming down. So that means the Federal Reserve should be pivoting maybe sooner than later. So without further ado, here's where mortgage rates are going. So let me explain how this works. Right here, this is a mortgage bond. It trades on Wall Street. And again, what we watch is what's going on with this, but mainly we focus in on this, okay? What you want to look at is what's going on with the price. And then right here, this is the adjustment for the day. It's like a stock. You can see the stock, your stock going up and down in price all throughout the day. That's how this works. So we might have in one particular day, banks might reprice their interest rates 1 or 2 times a day based on what the activity is. But what we follow is this. The price of the bond. If the price of the bond as it is today, as it's going down, it means rates are going to go up. But 0.05 isn't going to really do anything. So the markets should be flat right now. I expected it to kind of come in a little bit higher, bringing rates down a little bit more based on the economic data we have. But it's still early. The numbers will probably change throughout the day. Many times in the morning, you see kind of a lag, and then throughout the day, it kind of upticks and goes from there. So that's what we saw yesterday. We had in the morning, MBSs were down. By the end of the day, the mortgage-backed securities were up, pushing rates down. So if I confuse you, please subscribe down below. Watch me on a daily basis. You'll get the gist of what's going on. But again, all you need to do is watch the MBS market. If the price of the MBS is going down, rates are going up. If it's going up, rates are coming down. So that's it. The bigger that number, the bigger the adjustment. So if you're out there and you're like, hey, Dan, I really love your calculator. I might look at buying it. I'll test it out, do whatever. But what can I do right now? Can I reach out to you guys? What do you do? So my name is Dan Frio. I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico. So no matter where you are in the United States, I'd love to help. I can help you if you're looking maybe for a reverse mortgage. If you're looking to kick the tires, can you afford in this market? Do you make enough money? Is your credit good enough? All those things. Or do you have a ton of equity in your house? And now you have a bunch of credit card debt because you just were crazy spending for a while. And you're like, I got a ton of equity in my house, but I have this debt. What should I do? Check in with us. I'm not trying to put you in any more debt. Maybe we can make you a good financial store to your money and just restructure that to help you out. How do you do that? Well, visit us at therateupdate.com. That's our website. Here's all the tools we have. Check out all the things above. If you're Spanish speaking, you can actually click right there, understand our website. If you're locked in on a rate right now and you're like, hey, Dan, can you guys maybe get me a better rate? Because I've seen rates are just plummeting. We added a loan estimate calculation right here or link right here. All you need to do is click that. And what you're going to do is you're going to put in your information and upload or download your loan estimate that you received from that lender. Because if you're out there and you're looking to get pre-qualified, what they're going to do is they're pre-qualify you. And then they're going to send you a loan package. And that loan package is going to be basically, it's going to tell you the price of the house, the amount you're financing, the interest rate, what kind of loan it is, and then all the cost. We need to know the cost, folks, because the cost is a huge piece of this equation. But if you're out there and you're like, hey, how do I apply? Well, there's an apply now button right up there. It's a little unique. What it's going to do is it's going to ask you a few questions. Based on those questions or the answers to those questions, we're going to assign you to a loan specialist in our team that helps in specifically those loans that you're looking for. But if you're out there and you're like, Dan, can I call in or can I email you? Absolutely. Scroll to the bottom of our website. You're going to see a bunch of blogs and tools and things like that. You're going to see right through here, we have an 800 number and my email address, and it is right there. So look forward to seeing you guys this evening. Please don't forget that we're going to go over how much can you actually afford if you're buying a house. And if you want to reach out to us, this is the best way to do it. And if you haven't yet subscribed, please do so right down below. Thanks so much for watching. God bless, folks. See you tonight. Bye.